you can also lose your ass. I've got over 25 years of commercial finance experience, from commercial real estate to business loans. If I'm going to go start a business, one of the toughest ones to go start is a real estate investing business. There's a lot of people out there that have fallen for, get rich quick schemes on the internet. Let me go set up my Amazon, drop ship and make, my $500,000, all that stuff. Get rich schemes that aren't real. And you can make very good money doing what we do. However, you can also lose your ass.
Is equity getting pulled back in homes? Is equity going up? Are we stuck?
My strategy or my suggestion always is to start with a rehab, because again, your out-of-pocket cash is going to be less.
It is a Crafting Goals Friday, so hey, cheers.
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 Cheers. Yes, baby.
Yo, what's up, y'all? And welcome back to a Crafting Goals Friday with the Property BRRRRothas. I am your host, Jordan, along with the Numbers Ninja, my cousin, my partner, Drew. And
What's
today,
y'all?
Ladies and gentlemen, man, we have a special Crafting Goals Friday in the building. Our guy, our go-to loan broker, Mr. Ron Castellon. Ron, what's up, man?
What is happening?
What's up, guys? How we doing?
Hey, man, we
are fantastic. I'm so happy to I've got your voice imprinted in my mind, and now I finally get to see your face. It's amazing, man.
We've
It's
talked
great
so
to see
much
you.
on the phone, huh?
Do they matter?
Absolutely.
Yeah,
Listen,
man.
guys, I'm super excited because Ron, dude, you've turned out to be kind of like my Swiss Army knife of loans, right? Anytime that I have a situation where I'm like, can this deal get through, or can you help me analyze this? What are some options? You are always my guy that I go to, and it's like, dude, if Ron can't do it, nobody can. So it's such a pleasure to have you on this show, man. And I'm super excited to pick your brain because there's so much stuff going on right now, man. And there's so many different things going on with like the tariffs one day, tariffs here on, they're off, et cetera, et cetera. So, dude, I'm amped. How about you, Jordan?
Man.
You ready?
Yeah, absolutely, man. So we've worked with Ron on multiple deals. And dude, if you're trying to make sense of what lenders are doing right now, this is definitely the episode for you, the episode that you need, man. I mean, DSCRs, pullbacks, refi hurdles, the Fed, dude. It's like Drew said, man, it's all shifting. So we're going to get kind of Ron's take on what's actually happening behind the scenes, what the deals are still getting done. Yeah. And just, and possibly how to pivot your strategy for the second half of the year. So with that said, gentlemen, it is a Crafting Goals Friday. So, hey, cheers.
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 Cheers. Yes, baby. And I'm super excited to get Ron's take on how are banks kind of feeling right now? How do banks feel in this kind of weird situation where there's, is equity getting pulled back in homes? Is equity going up? Are we stuck? How many homes are getting sold right now? How many homes are on the market? I really want to get a sense for the environment.
Yeah, man.
So do you want me to go?
Yeah, go for it, man.
Go
Jump
for
in.
it, Ron. Talk to the people, man.
Hey, it gives us a second to take a swig.
No doubt. So I think the one of the things out there that you can look at or think about is the banks. The banks is such a big word. The banks, and really when you break it down, it's so much more. When you're talking about the banks, you're not talking about Chase. You're not talking about Citibank.
Right.
You're talking about a much smaller group, a much smaller organization that's out there specifically designed to lend on real estate. Those are the things you're really talking about. And they're so much different than your Chases of the world.
Yeah, your commercial banks.
Yeah.
Your Chases of the world, from a lending platform standpoint, they don't lend money to small business. They do not.
They don't trust us.
That's a risk they're not willing to take.
Right.
75% of small businesses fail in the first 3 years.
Right.
Boom, done.
Yeah.
You know, you start out all energetic, you're happy. I'm an entrepreneur. Here I go. I'm gonna make
Yeah.
millions.
Yeah.
Year 2, the money's not there yet. Year 3, most people go.
It's sink
Right.
or swim, right?
And the ability to go get funding for your business, and in this instance, for the real estate business, you know, that is in and of itself a real challenge.
Right.
If I'm going to go start a business, one of the toughest ones to go start is a real estate investing business.
Why didn't you tell us that 2 years ago?
You holding out on us, Ron. You're
Because
supposed to be
Can I
the
ask
cheat
you real
code.
quick?
let me answer you, because I had a mortgage to pay.
There you go.
But okay, so can we take a step back? Like, Ron, who are you, man? Like, you're the man, the myth, the legend in our eyes. But who are you? How did you get in this game? What's your background, and
So,
why are you qualified to be on the Property Brothers?
A, I'm qualified because you asked me,
Check.
and B, I accepted.
Yeah.
Yes,
There you go.
100%.
And I'm happy to be here because I do enjoy, to be honest, working with both you guys. It's enjoyable. You know, I like to work with people that I connect with and can communicate with, and we all have common goals. At the end of the day, our goal is to get a deal across the goal line. Score.
100.
Touchdown.
Amen.
So that's been, if you want to talk about who am I, I've got over 25 years of commercial finance experience in a lot of different industries, from commercial real estate to commercial lending to business loans to equipment financing. I even worked for John Deere at one point, selling excavators, if you know what those are.
Yeah, man.
Yeah.
Yeah.
$500,000 piece of equipment. So,
Mm-hmm.
and at the end of the day, it really boils down to in selling, right? Because at the end of the day, I'm a salesman, and I really make 2 sales.
Yeah, 100%.
I make one to you, and I make one to the lender.
Yeah.
And I need to be a doubly good salesman to get it done. I have to sell both.
Yeah, exactly.
That's true, man.
Especially repping Florida, man, right?
And at the end of the day, it's a matter of determination and being able to think outside the box.
Yeah.
I think my tenure, my career, I've always been a guy that is able to take a step outside and think a little differently. So I come up with solutions that maybe, I'm not a genius. I'm not saying that, but I do think a little differently, and I look for solutions to problems. Drew, you know this. I like to think ahead for potential problems.
Right.
In a couple deals that we've done, there have been problems that came up we didn't know they were going to show, but I already had plan B in place.
Yeah. And that's truly a quality that you have is, you do think outside the box. And, it's funny because I remember talking to Jordan about my relationship with you. And to be honest, when we first met, I thought that you were a bit abrasive, but that turned out to be a quality because you're right. You are not only selling me, but you're also representing our deal. You're representing my deal to the lender, to this small, piece of the pie that's out there, and saying, hey, here's why you should invest in my guy as opposed to taking on this other deal. Right. That's a beautiful advocate to have.
So It's funny that you use the word advocate, because I was just thinking about what you were saying. And really, for me, I'm an advocate for both sides. So if I have to feel good about a deal, right? Yeah. I'm not going to bring a bad deal to a lender.
Right.
And try and jam it down their throat. I have to feel good about it. And if I feel good about it, I'm going to battle for it.
Yeah. I love it.
So I have to be an advocate for the lender. I have to find the right deal for them, that they're going to be happy with the work that I do.
Yeah.
And in the same breath, I have to be an advocate for you. I have to be able to go and present your package in the best light possible.
Yeah.
And when invariably, I haven't had a deal maybe ever that didn't have something pop up unexpectedly.
Yeah. Always.
It can be the cleanest, best deal in the world, and sure enough, out of nowhere, field something.
Right.
A lien from 20 years ago when, it's been long paid, but never got cleared off title.
We have a lot of folks that are trying to get in the game. What are some of the things that you would kind of coach them on they were, how do they come to you and say, hey, my deal's worth taking on, and what is it that you're looking for that helps you feel comfortable with representing them?
So I talk to a lot of potential borrowers or investors, call them what you want, literally on a daily basis. And I talk to investors that have 50 doors, and I talk to investors that have 0 doors. And, your 50 door guy has got the bumps and bruises, and the track record. He knows what's coming.
Right.
So there's not a lot that's going to surprise him. So when we talk about deals and, the unseen hiccup, when it happens, he's ready for it.
He's been through the ringer already, right?
Yeah. On your new investor, I think the thing I would start with a new investor is to have your eyes open, right?
What do you mean by that?
So have your eyes open. So you need to fully understand who you are, right? You need to
Are you talking financially or?
Well, I'm talking financially. I'm talking personally. I'm talking, all the way down to maturity wise. Because if you truly want to get into investing in real estate, there's a level of maturity involved,
1,000%,
and commitment involved to make it happen.
Yeah.
There's a lot of people out there that have fallen for, get rich quick schemes on the internet. Let me go set up my Amazon, drop ship and make, my $500,000, all that stuff.
Yeah.
Yeah.
Get rich schemes that aren't real.
Right.
And you can make very good money doing what we do. However, you can also lose your ass.
100%.
Absolutely. Yeah.
And, so if I was going to coach somebody new getting in, first thing I'd say is take a look at who you are.
Yeah.
Dude.
So what are some of the qualities that you would say would be the makeup of a good investor?
Thick skin, right?
Yep.
The ability to pivot, the ability to stay unemotional or unattached to a project. Because sometimes, you can love it, but like there's that TV show, Love It or List It or Love It, right?
Right.
Yes.
Sometimes you should list it. Let it go.
Yeah.
I know you love that girl, but she's got to go.
She got to go. Yes.
So, Bron, this is awesome, man. I just want to kind of piggyback on that and peel this back, because what Drew and I have constantly preached really is, especially on our crafting goals episodes, is starting with a plan and kind of taking those, rosy lenses off and being honest with yourself and coming to the plate with a plan, coming to the plate and knowing like, hey, this may not work out, and you need to absolutely have a plan B, plan C, plan D. And I think it's so apropos when you say like there's a level of maturity, because as you mentioned, there are so many people out there that are on TikTok, on Instagram, trying to make a quick buck. And while that might work out in the short term, it's not built to last. And I think that's where you're kind of alluding to.
Okay. So piggybacking off your point about having a plan, it's important to have a plan, but also have a reasonable expectation. I run into a lot of new investors that want to, they see these, we talked about this before, these ads on the internet where, hey, you get 100% financing and 100% of the rehab, no experience. Those deals just aren't real. If you don't have experience, plan on having 20 to 30% down. And if you can't do that math, buy a calculator.
Can I ask you a question? So you're talking about, for a first-time investor to come in and have a 30% down payment or 20% down payment. Why wouldn't they just go with a traditional loan instead?
Well, a couple things. First of all, traditional loans generally are going to be more paperwork. Because you're talking about going through the traditional bank. So you're looking at more paperwork, longer time to close. For underwriting, they don't look at the property the same way. When we're talking about real estate investment banking, they understand the value of the property is what's guaranteeing that loan. Right. So your first time investor, if he goes to the bank with the 30%, what's guaranteeing that loan is going to be his income, going to be his tax returns, going to be, him.
And that right there, that's a pro tip, guys. Like, I know a lot of people, they'll go and say, man, if I'm only going to get 20 to 30%, And it actually, so you can correct me if I'm wrong, Ron, but it might be a little bit more expensive to do a DSCR loan than a traditional loan, but you do go through the ringer.
It's definitely more expensive. However, at the end of the day, this isn't your home. This is your business. So, rates on a investment property are not residential real estate rates, right? You're going to pay less for a personal mortgage than you're going to pay for an investment property. You're going to pay less for a personal mortgage than you're going to pay for a commercial property. Commercial property lending is going to be 2 to 3 points higher, right? And there are a lot of reasons. Part of it is going to be.
Now, what you're talking about, let's just clarify. When you're talking about 2 to 3 points higher, you're talking about the initial loan getting into the property where they are fixing that home up is going to be 2 to 3 points higher, not when you refinance and get into a 30-year
actually,
fix.
I'm talking across the board, right? If I'm going to do like a long-term loan on a office building, that's not going to be in the 6s. You're going to be lucky to be in the 7s. It's going to be 8.85% interest.
But if you're buying, so the folks that we're talking to are buying residential homes.
What I'm talking about is the fact that the difference between a residential mortgage and an investment property mortgage. You're going to pay more for an investment property, but what you're investing in is your business, right?
Yeah.
You're not going to put 5 mortgages, residential mortgages on your income. Unless you're, Bill Gates and you have that kind of cash, nobody's going to approve you for that many. However,
even Bill Gates wouldn't do that. He's not stupid.
On an investment banking side, real estate investment banking side, you could have 5 properties standing on their own merit based on the revenue that they're producing, and you'll have never shown a tax return.
Yeah.
Right?
Yeah.
So if the property is revenue producing and and you can show that you have a bank account and you've got, a little bit of money in the account, and the property will cover itself, you can get the deal done. Now, if you're first time out of the gate, you're going to have to come up with a little more of a down payment. Usually, to get into getting experienced account, 1 or 2 deals can put you in that 10% down range. And for those of you that can't do math, 10% of 100 grand is 10 grand.
So 10% is not really 10% on these loans, though. So, I mean, you got to think that you're probably bringing about maybe, I would say on the minimum, 3,000 down, 3,000 additional to probably 5,000 to 6,000 or 7,000 additional dollars for closing.
Yeah. So you got to
closing costs, points, all that good stuff.
At the end of the day, money's not free,
right?
And you have to.
We have said that before.
So even for the seasoned investor, he's got to, he's still got to swallow that pill that, this money costs me money.
Is it the blue or the red pill?
It's both. It's both.
I don't want to take it. I don't want either of them.
Right?
It's both.
So one of our viral shorts has been, and when I say viral, it's got like 3,000 views. Hey, that's viral to us.
That's viral.
I told you I don't have more than 5 friends.
So the hidden costs of mortgages, right? Of refinances. Man, dude. So, we talked about, there's this weird ass lawyer fee. That's always, I'm like, why is there a lawyer fee? They're the ones who wrote this contract. They're the ones who have figured out they know exactly what's included in this thing. Why are they re-lawyering this? Excuse my French. I'm sorry.
They're making me pay for it.
So, for example, somebody that we've done business with together, they have the legal review fee. And I've had conversations with them about that. And I've had conversations about, why can't I get that waived? And, my conversations have been at the VP level. So not a clerk, but, higher up. And they literally do, every file gets legal review. Now, what really happens when it gets looked at? I don't know if a law clerk looks at it. I don't know, but at the end of the day, they're paying a lawyer to put a stamp on it. Now, that's an internal process, right? And we talked about how, being in this game, you have to be careful not to internalize or take this stuff personal, right?
Right.
And
Right.
it's not a
It's the cost of
it's a
doing
cost
business,
of doing
right?
business, and every lender has their own little idiosyncrasies. That legal
Yeah.
fee for, I'll say it, for FACO, they're not getting rid
Yeah.
of that. I've
Yeah.
got another deal I just did today with a client, and he paid for the appraisal, and then they hit him with, after the appraisal came back, an appraisal review.
I've had
You're
those.
right. And
That's
it's like
rough.
90. It's like
Yeah.
$90.
Yeah.
And
That's
he was
rough.
like,
You pay $800 for the appraisal, and then you get
bucks.
another $90 for them to review it.
and he was like, I feel like you're nickel and diming me. And I had to go back and say, listen, don't internalize it. It's not
Right.
personal to you. It's just their process. So their internal process, this is the way it works. They get the appraisal. They literally have a third party look over and review the appraisal. They check the comps. They check whether the property's listed correctly, the square. They go over and they literally verify that the appraisal's accurate.
So Ron, what are some of the other fees that are included in a loan?
Well, I mean, pretty standard stuff. You're going to run into an underwriting fee. You're going to run into a processing fee. You're going to run into a legal fee. You're going to run into a fee, FIFO from.
Right?
Yeah,
So,
that's crazy.
But then you got your fee too, because dude, your service, I have to say, I didn't appreciate working with a broker until I started working with you, right? Because like you said, there's a lot of value that comes into play. If I was going directly to a lender, there's no one that is saying why this deal is a good deal. There's no, one of the things that we talk about in the appraisal process is making sure that you document your entire journey. So taking photos of all of the upgrades, making sure that you let people know that the roof was redone or the electrical or the plumbing has been done. You're that advocate for us to the lender, because the lender is not going to listen to us. They're going to listen to you about, hey, here's why this is a good situation, right?
So, and there's also, it even gets down to when you are direct to a lender, you're just a number in a big batch of numbers. When you work with someone like me, I probably have at any given time 10 to 15 files going at once. I can't handle more than that.
Yeah.
But what happens is, if you've got a lender that's doing 1,000 or more loans a month, and they make a request, somebody might not follow up on that request to see where it's at for 2 weeks or 3 weeks. So,
or in our case, a month.
So you can have a deal stagnate and die or not get done just for lack of attention. So having somebody that's going to drive it forward, right? Listen, it's my nature to try and get them done faster than they tell me.
Yeah.
So I'm always going to try and close sooner rather than later.
It's funny. Whenever we have a deal, the first text that I get in the morning at 5:00 in the morning is always you.
Right. Good morning.
Dude, does this, I know what I got to do, Ron. I know what I got to do,
I got the gray hair. I'm dad.
That's it. Cool, man. So
Jordan, you had some questions that you were talking about.
I want to cover off on the feed thing a little bit too.
Yeah.
So again, at the end of the day, you have to be careful that there can be a lot of fees, and there are definitely guys out there that jam it up. So I think a reasonable expectation fee wise, there's probably a processing fee, an underwriting fee, a legal fee, some combination of those three things. I'm not sure if I said origination or not, but that's kind of in there. And then you've got, and then your broker fee. So you're probably,
that's standard.
You're probably looking at somewhere in the neighborhood of 3 to 4 points total on the loan. As a rule of thumb. If you're,
So what is a point?
A point would be 1% of the total loan. So if it's $100,000, a point is 1,000.
So you're talking about possibly
$4,000
loan.
Right. So, but that's just, again, part of the cost of doing business. If you were going to manufacture lawnmowers, You'd have to buy equipment that could forge the engine. You'd have to buy equipment that could shape the metal for the body. I mean, you have to invest in the business to be able to produce. You're investing the fees or the cost to get the deal done is your factory. That's how you produce your product.
Yeah.
And that's the way to look at it. You know, it's the cost, it's an expense to get my business running, to make my factory run.
And one thing that's been interesting to me through this process over the last couple of years is a lot of times lenders will wrap in additional interest fees in that loan to pay for the first couple of months.
So you mean reserves?
Mm-hmm.
Yeah.
You call it reserves, I call it stealing.
Well,
I'm just kidding.
I mean, literally,
it's not stealing.
If they put reserves on the front end, then you're not making, like, let's say they put 3 months reserves in, so you don't make payments for 3 months. I mean,
exactly.
So
exactly.
To me, that's a wash. You're either going to pay it now, or you're going to pay it
later.
You know, it's still money that you have to pay.
Yeah, I would agree. But for like a first time investor, it's a lot of money.
It is a lot of money. And again, so I think that's part of what I said, you know, be aware, know yourself, be aware of who you are, understand what you know, you can and can't afford.
Yeah.
Have a good idea of what it's going to, you know, it's hard to know what it's going to cost because you've never done it before. But, you know, there's guys like you that'll do a podcast. Go find one. There's guys out there that have done it before. Go ask for help. You know, last time I asked for help, you know what happened?
What happened?
No, you got help.
If you ask, absolutely. You get it, you know?
Yeah. Asking you shall receive, right?
And last time anybody ever asked you for help, you helped them, right? Yeah.
Yeah. 1,000%.
Yeah. Jordan, you got some questions that you were piling up, man.
Yeah, man. So listen, just to kind of recap this, you know, and to, you know, bring it back to our audience. I don't want to alienate anyone, but, you know, the simple truth is people is to come with a plan, you know, like Ron is saying, be mature about it,
100%.
right? You know, it takes a certain level of maturity when you get into investing, you know, and Ron, this is our, 14th, 15th episode. And, you know, we've been kind of talking about 12. We've been talking about those since episode 1 that you have to start with your why, and you have to know why you are doing this. Why is this important? And it can't come from TikTok. It can't come from social media, right? It's got to come from within. So that's what Ron's talking about. You have to have that certain level of maturity. And, you know, don't take it personal, though, you know, because sometimes there's going to be some fees in there. Sometimes there's going to be some hoops you have to jump through that Ron's talking about. And you can always shop around. And we talked about that
100%.
in the episode where we spoke about refinancing.
Yeah.
Shop around, compare, put it on a sheet, put it on a spreadsheet. So to pivot us though, Ron, I want to kind of move to our next section. What are the type of investors, or what are the type of deals that you're seeing right now that are getting the green light versus some of the deals that are kind of getting pushed to the side or getting squeezed?
I would say the majority of I would say 75% of what I'm seeing is DSCR or rental hold loans. I would say the fix and flip population has slowed dramatically. And I don't know that's a function of inventory or investor changing their focus from the flip to the hold. Depending on who you talk to, the economy's great or the economy sucks. It just depends on what side of the fence you're on.
Yeah, exactly.
The truth is usually somewhere in the middle.
Yeah.
Right.
So, but I would say the majority of what I'm 75% is going to be DSCRs or rental holds. I think that there's a population out there that is trying to accumulate doors.
Yeah, I mean, we did an episode a couple weeks ago, kind of reviewing a reaction video on YouTube about a young lady who was accumulated like over 22 doors in a year and a half.
Yeah.
And now she regretted it, right? And she was like, yo, she was cash flow poor. Or she was just really
Equity rich, cash flow poor.
Right.
Yeah.
That's right,
exactly.
man.
It's interesting, Ron, it's funny because like I've been reading a lot with regards to the economy right now. And it seems like there is some sort of economic shift where people are wondering, are we going to hit a recession? Now, the last time that we went through this recession period, the people who had cash cleaned up, right? So I'm wondering if though the reason that you're seeing a lot of the fix and flip loans not really coming through is because they are waiting
Purchasing
for that
cash.
recession to come in.
Yeah, I mean,
right, so that they can pick up.
There very well may be some hedging, cover your ass.
Yeah.
I also believe that the DSCR loans inventory that's out there to be found, you can get a turnkey property at a decent price right now. And because rents are so high, it will flow without rehab.
Yeah. But, and that's something that's interesting because when I look at that play, I look at it like, okay, well, if I come to a DSCR loan without rehabbing, that means I have to come up with more money to put down.
Agreed.
Right. So I got to put down 80%.
Yep.
Right. Versus 90%. And then maybe I could put some lipstick on a pig. Maybe I buy the house for 100,000, put 10,000 into it. At least I would get 90% and 100% of the rehab, and then life is groovy.
Right. Agreed. So that's a tap dance that you have to really consider. Again, I think the smart investor is got a portfolio that's a mix of holds and flips.
Yeah. Let me so what's your thought? Like right now, you're literally in the trenches. You deal with this stuff every day. If somebody is getting started, what would be your recommendation besides having thick skin? How do they become successful at this? And one of the things that we preach is that this is not a get rich quick. This is a get rich slow, right? 10-year or more,
Minimum,
but it's better than a 30-year situation.
Yep. We've kind of touched a lot about people getting in, being honest with yourself, having a plan. Again, setting a reasonable expectation of who you are. You got to know what your credit score is. If you've got below a 650 credit score, it's going to be tough to get a deal done. Most lenders draw the line at 680.
I don't know how I ever got a loan.
So, I mean, listen, I did it. I did a deal 2 days ago with a guy that had a 550. So I can get it done, but it wasn't cheap.
Ron's the man.
Me like that.
It wasn't you.
Ron's the man. Hey, Ron's a cowboy, man. He gonna get it done. It's the Wild Wild West out there.
And that's the one thing that I love about Ron, man. Ron finds solutions. He is the solution guy.
But at the end of the day, if you're getting in, make sure your credit's good. Again, if you were look at it from the lender standpoint, if you were going to lend somebody money, would you lend somebody the money who couldn't pay their bills?
Hey, would you lend you?
I would lend me money.
That would no. I'm saying like you should look at yourself in the mirror and say, would I lend me money?
That's
yeah, that's what you should say.
You should.
Right?
That takes doing that every day takes balls, right? Go look in the mirror every morning, look yourself dead in the eye, and question yourself.
Yeah.
Am I really who I want to be?
Michael Jackson, man in the mirror.
Am I really who I wanted to be? Or am I faking it?
Yeah.
Same deal with, I'm going to be a first-time investor. What's my credit score? I need to be over 650. Maybe I get one done. 680 is the target. I need to know that I have, 10 or 20% down payment plus closing costs. We'll call it 5%. So I need 15 to 25%, depending on the package that I'm going to do. If the deal sounds too good to be true, it probably isn't. Yeah.
Really? Explain that.
Well,
back a little bit.
So, for example, on a property, getting it, the price is too good to be true. There's probably something wrong. Foundations effed.
Yeah.
So you said it
The
probably
sewer
isn't.
needs to
You
be
said-
scoped.
Dude, the sewer
Right,
scope. Oh my God.
Doesn't mean you can't find a gem. Doesn't mean that can't happen. But you have to
Yeah.
have your eyes wide open and expect it. Like be the devil's advocate. Right? If something seems too good to be true, challenge it
There you go.
and prove it to be true.
Right.
Or prove it to be untrue. Right? I love to challenge stuff. I hear something that doesn't sound right to me. I'm going to challenge it.
Yeah.
And it's either going to be right or wrong.
Yeah.
So.
But you won't know unless you challenge
same deal
it. Yeah.
on a lending platform. If the deal sounds too good to be true, it really isn't. You know, they're setting that line out there.
Wait, so you keep saying probably isn't. Do you
Because
mean that it probably is too good to be true?
No, he's saying it isn't, so that you challenge it, so that you can prove that it is what it is, or it isn't what it isn't,
or what.
Well, the great thing
isn't means
it's
that
the
it
spicy
isn't a
margaritas
deal.
you're drinking.
I don't have the spice. I got look. I got the vodka. I got the vodka mule, right?
That's why you don't understand what
and
he's saying.
And I have the lime margarita.
And I got J-Mo.
Okay, so if the deal sounds too good to be true, it probably isn't.
True.
Isn't true. See, you didn't say true.
Right,
you said
because
isn't.
You're a smart man. I figured you could figure it out.
You're not talking to me. You're talking to the audience, my friend.
I'm not going to insult. I'm not going to insult your audience. They're smart too.
Let me ask you a question.
Smarter than you, Drew.
What are your expectations for Q3?
You know, after the election, I had the sense that rates would come down. That has not happened at all. They've fluctuated at best. They come down a little bit, they go back up. They come down a little bit, so they've been steady since November. The Fed isn't going to drop rates anytime soon.
Is that just to spite DT?
I think so. I do.
Yeah, I think he's like, yo, I know you want me to bring the rates down, but F you.
But I think that they're gonna come down in time. So when I'm talking to people about
what time?
3 years.
Okay.
So when I talk to people about prepayment penalties and they complain about them, you know, I give the option of most prepayment penalties are going to be a 5-year decline. 5, 4, 3, 2, 1.
Yeah.
Right.
Yep.
So if you're concerned about the prepayment penalty because you think you're going to either refi or sell the property.
Hold on one second, Ron. Not everybody knows what a 5.
Yeah, let's peel that back a little bit, Ron. A 5, 4, 3, 2, 1 prepayment penalty, a step down. Could you explain that for our audience, please?
I can, and I knew you were going to ask. 5, 4, 3, 2, 1 step down prepayment penalty basically works this way. It's a 5-year pay penalty if you prepay the mortgage off under 5 years. So in year 1, it's a 5% of the loan penalty.
Or 5 points.
Correct.
Boom.
Correct. So 5% or 5 points of the loan if you pay it off in the first year. When you get to year 2, it drops from 5% to 4%, or 4 points. In year 3, it drops to 3. Year 2,
and so forth.
4, it drops to 2, and year 5, it drops to 1. So on a 5-year prepayment penalty, typically you want to hold at least till year 3. So when you get to year 2 or 1, you're only at 1 or 2% or 1 or 2 points penalty. And if you sell right or refinance right, if the rates are right, you should absorb that 1 or 2 points pretty easily. On a 5-year, if someone is thinking they're going to refi earlier or sell earlier, I try to get them to look at a 3-year. Most people aren't going to sell a property in 1 year. They're going to have it that year. So there's no point in trying to spend an extra, 1.5 points on your rate to get a 1-year prepay when you're not going to sell it in that year.
Exactly.
So if you go a 3-year, so then at 3 years, at year 1, it's 3%. Year 2, it's 2%. So I'm already into that 2-1 number. Year 3, it's 1%. So if rates are going to be 2 to 3 years down the road before we get into the, 5s or 6s, then going with a 3-year prepay makes sense.
Yeah, that's beautiful. I think that's something that when I first got into this, I didn't understand what a 5, 4, 3, 2, 1 was. So I appreciate that explanation. Thinking about when our rate's going to go down. And that's one of the things that we talked about in, I think, 2 episodes ago, where you have to understand what the environment is, right? So if you're going to refinance, you have to understand, are the rates going to go down soon? Do I want to refinance now? Because I'm going to be locked into this with a penalty for up to potentially 5 years. Right.
So
wow.
It boils down to, if you're in that refi realm, there's a couple of reasons you're going to refi. First of all, it was a fix and flip, and I need to refi because my 12 months is up. So I got to refi. That's number 1.
Yeah.
Number 2, I've done the fix and flip and I've got to refi, but I also, because I've done that fix and flip, I've got some available capital that I want to be able to pull out and do another deal. So, I have to go weigh that, is it worth me taking the penalty to take the capital out to get another door?
Right. And we have to clarify that fix and flip doesn't always mean fix and flip, especially when we're talking about the BRRRR. We're talking about the fix and rehab loan. And then when we refinance, we're paying that loan off and getting into a longer term loan. And you mentioned that a loan is what, 10, 12 months for a fix and flip?
So you're going to fix and flip, or we'll call them rehab loans. That'll cover both, right?
Yeah.
A rehab loan is going to be somewhere from 6 to 18 months, with the majority being 12. So it's a 12-month interest only carrying loan. Well, the great thing about them is they get you into the property.
Yeah.
Right. So you get that. I mean, that's your door.
Yep.
And now you've got the
absolutely.
asset, on your side of the ledger as opposed to someone else's.
Yeah. I think, Jordan, is it time to wrap this up, or do you have any burning questions?
I actually wanted to ask Ron about the what he feels about ARVs. Does he feel like ARVs are dropping, in this climate, along with rates and all that, all
rates
that
aren't dropping.
Well, rates aren't dropping, but in that
But
same
ARV,
breath,
sure,
what about
yeah.
ARVs? Because that definitely affects the appraisal and this whole BRRRR process, especially on the buy and the refinance.
I don't know that ARVs are dropping, but I do know that appraisals are a crapshoot.
Yeah.
I mean, you just don't know. I've had them come back way over what, they should have come in, and I've had them come back way below what they should have come in. I haven't seen a lot of actual rehab, like ARVs coming in below what the rehab spend was. You understand what I'm saying?
Yeah.
So if the investor put $100,000 rehab into the property, I haven't seen it come back with only a $50,000 ARV, a $50,000 ARV bump, right? So do you follow what I mean?
Yeah, absolutely. Yeah, I got you.
But I think the real issue and the real problem, truthfully, is appraisals. I mean, the appraisers, they're horrible. To be honest, they do crappy work. You can you can run through a building in 5 minutes, jump on the computer, pull some comps, and run an appraisal. And if they don't do the work, you, the investor, is stuck with an appraisal that doesn't represent the true value of the property.
Yeah.
Those are facts.
That's why we talk about that in that episode.
I've left some bad reviews for appraisers because, especially like you think about the property that you helped me to actually, after we went through, I'm telling you, this guy's tenacious. Like, you heard of that movie, The Tenacious D. Ron is tenacious, man. Like, we have a property. I have a property that's a church, and it was probably one of the toughest financing opportunities by far. I couldn't get it financed at all. And it was because of you and your tenacity to push it across the finish line that we actually are able to make it this gorgeous. And we'll show you a picture.
It's coming.
I mean, it's absolutely gorgeous
it
right
looks
now.
good. And again, that's one of those deals where, the competitor in me, you strap the helmet on, put your head down, and let's go. Right? Yeah.
He's a football guy.
Yeah. Absolutely. I'm super, like, that's been that project has been super close to my heartstrings, because we are building this for veterans and homeless veterans as transitional homes. And it's, even though it's right next to an electric substation, like, and here's the power of having a broker that is advocating for you. Like, you went and you sold this to
100%.
the lender, sold it, and dude, in fact, they said no twice.
Yeah.
You're like, listen, no, you don't understand.
100%. Yeah.
Dude, that's invaluable. That is absolutely invaluable. So let's pivot a little bit. I want to ask you real quick, what is your number one tip for adjusting your 2025 investment strategy? Because I know that you said that right now you're seeing a lot of folks that are just jumping in a DSCR fixed 30-year fixed loans.
Yeah.
Right. There's not as many fix and flips. Do you see an opportunity for people to just do you tell?
I think, I think the way, me personally, I mean, I've got 2 deals that I'm doing personally right now on my own as well.
You're an investor? No, you're not. Where are you investing at, man?
Yeah. What I'm working on right now is 2478 Lower Lake Road, Seneca Falls, New York.
Hey, Seneca Falls. We looked at New York for a little bit, huh, Drew?
We did. Yeah, there's some beautiful property out there.
Yeah, so it's a A-frame, and it's a full rehab, full gut, whole nine. So my strategy or my suggestion always is to start with a rehab, because again, your out-of-pocket cash is going to be less.
Yeah.
Okay. It leaves you options to make a decision down the road. If I'm going to rehab it and I really like it, then maybe I'll keep it. And if I'm going to rehab it and the rental market's there and it makes sense, then maybe I'll keep it. If I'm going to rehab it, but it makes sense to move it because I can make a 20, 30, 40 grand return, then I'm going to do that. But I think I think you can, because you're going to do the rehab, you can buy at a decent price if you're willing to do the rehab.
Okay. My gosh. So now I have a whole nother level of respect for you, because you are in the game. You're not just
1,000%.
You are actually in the trenches with us. That's beautiful, man. That is absolutely beautiful, man. So why Seneca Falls? How did you, what is it? First of all, are you a buy and hold? Are you a fix and flip?
I'm going to keep it for a while. I'm going to do an STR on it. It's lakefront.
What's the STR?
Short-term rental, Airbnb.
Okay.
Hey, nice.
And I'm going to use it a little personally too.
Nice. Hey, so you have visions of going and visiting the lake.
Yeah. Well,
Vacation.
I grew up in Lake George, New York. So I grew up on a lake.
Nice.
So, but nice. I came across it on the internet, and it's a unique property to the area. There's nothing like it. It has 40 foot of deck across the front of it. So it's A-frame, all glass in the front, 40 foot of deck across the front. And it's just been a cool project. I can tell you.
Can we bring it up, cool. Ron? Ron, can we bring it up?
Let's see this you're doing a rehab on it right now?
Yeah, I was actually.
What type of work are you getting done?
Right now they're working on the 2 bathrooms. Just 3/4 finished with the kitchen. Did all the floors.
That is gorgeous. Now, is this a looker? Are you doing anything on the exterior?
So yeah, so
Is that
so
fire?
that's just the wood.
No, that's just where.
Okay.
How about this kitchen? This kitchen's a looker
Yeah,
a little bit.
Completely got
It can be
completely
updated.
got it. I'll send you pics of what it looks like now.
I can't wait to see it.
So what did you pick this up for, Ron?
$255.
Okay.
55. How much is going into this?
I'm at, I think, 80 right now.
And what's the ARV?
ARV is 480.
Beautiful. That's a great. And look at that
beautiful.
character on that stone. Can you keep going down, George?
Yeah. Hang on. Just doing some math.
Look
So
at
he's
that,
335 in and an ARV of 480. That's beautiful, dude.
Nice
this,
work.
Hey, this might turn out to be a perfect BRRRR.
Absolutely. 100%.
Especially if you're going to do your own refinance on this too,
Probably.
Ron. Yeah.
Right.
Why not?
This
Save
is a
the fees.
3-bedroom?
It's three.
It's a 3-bed 2. It says 3-2.
It's 3-2, but I'm gonna put a 4th in,
Okay.
Ooh, check you out.
and that's the downstairs.
Man, so it's got a second fireplace, huh? Dude, that's
this
beautiful.
is gonna be
Ron, this
great,
is gorgeous,
Ron.
man. Congratulations.
Yes, sir. Yes, sir.
That is beautiful.
outstanding. Love it, man. And
So
that's what we do here,
So-
bro. We look for lookers, turn them into bookers.
stop for a second.
Yeah.
Can you see my mouse? You can't probably.
Mm-mm.
So do you see the garage door? You see that
Yes.
sliding
Yeah, right here.
sliding door over to the other side?
Yes.
Yeah, right here.
That's been taken out,
Okay.
Okay.
and I replaced it with a black wood and glass modern door.
Nice.
Mm.
So at the front door was also a slider, which is up on the top
Uh-huh.
deck. So I replaced that with another black glass and wood modern door. So the vision is to change it from the chalet feel to a more modern feel.
Love it. Have you been out to visit it yet?
I spent a month there in January.
That was when I was trying to get a hold of you and you wouldn't pick up the
Yeah,
phone,
I was like,
right?
fuck you, I'm cold.
I love it, man. Dude,
Oh,
thank
that's
you
funny.
so much for sharing. This is
Yeah,
amazing.
man. We appreciate that. So people, listen, man. I mean, look, even our loan guy, right, is in the space, man, and he is buying right. You know, you can find these deals anywhere across the country if you buy right and you do your due diligence.
100%.
Don't be afraid of my idea is don't be afraid of the rehab. Don't get yourself in over your head, but don't be afraid of the rehab, because that rehab is where you're going to see your bump in value, right?
Yeah.
You know,
And I see what you're doing here with this rehab, man. There's selfish reasons. You're
Vacation.
like, I'm gonna make me an Airbnb, and then I'm gonna go out and fish when I want to fish.
100,000%.
I love it, man.
That's
That is
beautiful,
so
Ron.
beautiful.
That's beautiful, bro.
Ron, where can we find you, man?
You can find me. You want my website, www.diversifiedcat.com. You can find me on Instagram. You can find me.
What's your Instagram handle, Ron?
Yeah.
I think it's Diversified Capital. And you can find me on Instagram, Ron Castellon, very handsome.
Yes.
Find me on
Yes,
you are.
he
You
is
can find me
indeed.
on Facebook, Ron Castellon, very handsome. You won't
Yes.
find me on TikTok, not
Wonderful.
Chinese.
Nice. So, any closing words for our audience?
Be brave, be bold, be smart.
I like it, dude. Those are
Wise
those
words.
are words to live
And I'm
by.
going to send you a couple of the so far pictures on the rehab.
Please do.
Yeah, man. We want to
absolutely,
see, man. We want to see these updates, bro.
Yeah, send those.
gonna be
We'll,
cool.
we'll pop them into
All
the
right, no
vid.
worries. All right,
Yeah.
guys.
Awesome.
Ron, dude, it has been a
I'll
pleasure.
do it again.
An absolute pleasure, man.
Yes, sir.
Heck yeah. We need to check up on your BRRRR when it's done,
hear
man.
that.
Would you come back and share with the people?
As long as I can get another
Jordan
one of
likes to
these.
say. Yes, sir.
Always, man. Always.
Absolutely.
We'll definitely have to make it another Crafting Goals Friday. So Ladies and gentlemen, people, we are so thankful that you joined us for this Crafting Goals Friday, that we were able to add a little value to your day, to your evening. We appreciate it.
Your morning.
Follow us. Maybe your morning. Hey,
You always say
follow
to
us
eat.
on all the socials, man. Follow us on Facebook, on Instagram, on TikTok, and of course, like, subscribe, and share on YouTube. We thank you to Ron, the handsome Castellon,
All right, guys.
Ron?
for Drew, the numbers ninja, my brother. I'm Jordan, and we are the Property Brothers. Peace, y'all. Take care.
Take care.